We also want to check out the move in oil today. Crude falling 3.5%. And if you caught the show last night, you heard the Chartmaster sounding the alarm on an oil pullback. Now, Carter is back with a new warning, this time on small caps. So let's get to Carter Worth of Worth Charting to break it down for us. Hi, Carter.
Hi there. Thank you. Thank you for remembering a good one. I have all my duds too. But anyway, let's just drill down a bit. First numerically and then in pictorial form charts on the Russell 2000. Look at the first slide here. What this depicts, of course, is simply 10 weeks into the year, on the March 12th juncture, the IWM was up 19% and the SPY was up 6%. Now look at the next table. This is not 10 weeks in, this is 10 months in. So at present, IWM still up 19%, and the SPI not up 6%, up 25%. And so third of three, look at the next table. What we know is basically since March 12th, March 15th, the Russell 2000 is unchanged. It's a long time, whereas of course the SPY, the market, is up some 19, 20%. So looking at those numbers, let's look at them in pictorial form. Let's look at the chart. So what we have, of course, is that great run up off the pandemic low, blowing away the S&P, and then this great sideways action. And what's important is that slight breakout that is failing. And that is what is known as a false breakout. I don't think it has legs. I think it's just sort of stuck here, and there's no reason to be long absolute. Now, two more charts. Look at the next one. It's a two-panel. Same chart on the top, IWM depicting the tight range that has ensued after the big run-up. But look at the bottom panel. The relative performance of the S&P, that's what it's all about, has been straight down since. And so final chart, just put that same two-panel long term. That's a 10-year chart. What we know is the top is making new highs. That's the Russell 2000. But the relative performance to the broad market, the SPY, the SPX, has been nothing but a disaster. And it made new shocking lows during COVID. And even though it bounced, it never could really get back on its feet. We think small caps are a trap.
Small caps a trap. Thank you very much, Carter. I like the graphics and then the pictorial form. All right, Dan, I'm going to give you the first crack at it. What do you make of Carter's trade here?
I never go against Carter's trades here. And I will tell you, if you think the small caps are a trap, then the S&P 500 is just the biggest mousetrap ever known to man, because we know that there's about 6 stocks holding that whole thing up. And we just spent the better part of the last few shows over this week talking about all the poor performance in so many different groups. Carter just highlighted a really sensitive group to economic expectations and that sort of thing. We just talked about small caps here. So the S&P 500 has to be a much bigger problem in my mind than the Russell. The Russell could leave this lower. It's not likely to underperform on the downside, in my opinion. It has underperformed. But what I'm saying is, if we're going to get a sharp sell-off, it's going to happen because the biggest names in the S&P 500 are going to happen, or they're going to go down quicker than the small caps, in my opinion.
Karen, what do you make of this trade by Carter and the charts, what it potentially spells out for a warning for the small caps?
Well, I'm a little disappointed he didn't say to the penny, because I always love it when Carter says to the penny. But I think it's interesting what he's saying. It makes me think about it a little. I don't view the Russell as, you know, one monolith. I like to try to find things in it that I think are idiosyncratic that I hope will outperform. But it does make me think, all right, when I'm looking to hedge my portfolio, maybe I ought to use a little bit more of a Russell weighting than I have to hedge it if he's so bearish on the Russell.